To introduce Mr. Gil Guizon, who will be talking with you today on the National Flood Insurance Program. Thank you, Gil, for taking the time to be with us today, and the session is all yours.
Well, thank you, Cindy. Just want to make sure everyone can hear me just fine before I start talking.
To indicate you can hear Gil, please raise your hand.
You
can raise your hand and we'll see that.
Okay, great. I see some hands being raised. Okay, so let's go ahead and jump on in. We're going to talk about the NFIP, but first we're going to talk a little bit about what is mitigation. Mitigation is really important to us. It's defined as taking an action now to reduce future risk. So I won't insult your intelligence by going to more in depth of trying to define what mitigation is, but I want to talk to you about how important it is. And now how important it is for people to understand that locals will understand their risk greater than we would at our Region 6. I'm going to use an example. I had a call when I first got hired on FEMA. I was kind of in training, so they had me take a lot of calls to try to figure out what the situation was and see who it had to go to. I had a gentleman call me who was approved for a FEMA grant. They were going to elevate his house to 4 feet. That would be the BFE in his area. Well, he called because he understood that he was appreciative of the 4 feet elevation, but in his mind, it didn't mitigate the full risk around his area. He was sure that water would get higher than 4 feet. So he asked if he brought extra money to the table if we could elevate even higher. Well, after some research and talking to some of our grants people, the answer to that question was, of course, if he brought more money to the table, we can elevate higher. So he went and elevated 9 feet above the ground. And beginning of Harvey in 2017, I got an email from this gentleman thanking me for putting him in the right direction, and he sent me a picture of his home. Water was less than 3 inches from the lowest floor elevation of his house. The only reason water actually got in because people were driving boats trying to conduct rescues, and the wake action caused water to get into his house. Now, if he would not have known the true risk in this area, he would not known what to mitigate his house to. So it's really important that we understand that. So flood mitigation is really important because we need to break the perpetual cycle of flood, rinse, repeat. And by mitigating after a flood, we can build back stronger, safer. It also will reduce the loss of life and property. That's the overall purpose of being more resilient, coming back and mitigating your home after an event. And so this diagram I really like. We hear the NFIP a lot, the National Flood Insurance Program, and everyone just assumes it's just one program. But it actually has 3 very distinctive components. And I like this analogy of this 3-legged stool because it takes all 3 legs working together to make that stool stable. Now, those 3 characteristics of this stool are the hazard identification. Those are our risk analysis people. Those are the people who work with communities to help identify our flood maps. We have mitigation. They help manage the risk. They are our compliance specialists. They're the ones who reach out to the communities and ensure that they have everything they need to enforce regulations when either it comes to knowledge, proper verbiage, updated ordinances. We like to consider ourselves a partnership with our state partners, so either at the state level or local communities. We like to be there and let them know that we are here to help when it comes to mitigation. And mitigation, the compliance specialist, is really important because that's when we ensure that the communities are enforcing regulations. And by enforcing regulations, it helps ensure that the new construction homes are built to at least BFE or higher, making them more resilient to the peril of flooding. And last, we have flood insurance. This is kind of my baby. I'm the regional flood insurance liaison for Region 6, and I'm the one who deals with any concerns, complaints, issues with our survivors, our stakeholders, in regards to flood insurance through the NFIP. Now, the NFIP is a quid pro quo system, right? It's something for something. So the community has agreed to not only adopt, but also enforce regulations that were provided by FEMA. Now, these are minimum regulations. Our model ordinances are the same throughout the country. We leave it up to the communities to understand their full risk and make any additions such as higher standards, but what they cannot do is make that ordinance any less stringent. So by establishing higher standards, it can provide for a higher level of protection, and that will help with the affordability of flood insurance. Flood insurance, for the most part, can be very affordable if proper steps are taken, and also it can be very costly if steps are not taken to elevate houses. In the flood insurance world, elevation is truly the king of how to control the cost of flood insurance. The higher your house is, lowest floor or lowest horizontal member, depending on what flood zone you are, is above the BFE, the lower your flood insurance premium is going to be. It's as simple as that. The lower it is compared to the lowest for elevation or lowest horizontal member, the more expensive your flood insurance is going to be. So mapping. Okay, let me use this technology. If you live in a special flood hazard area, please raise your hand. If you live in a flood zone, raise your hand. Okay, I see 1, 2. Okay. All right. Everyone's hand should be raised, and I'm going to explain to you why. Okay. There are, on FEMA maps, you will not ever find a place that says there is no flood risk. It's simply impossible to predict. There's so many variables out of our control. So, levees breaking, dams being released, rainfall in records amounts like 52 inches we saw in Harvey. So we will never map an area as no flood risk or never expected to flood. We will simply put you as an area of minimal flooding. So the answer to this is everyone's hand should be raised because the entire country is a flood plain. It's just a question of what flood zone you live. Most people will be in an area of minimal flooding, also known as X zones. But we do have a lot of people who live in special flood hazard areas. And those special flood hazard areas, as you can see from the presentation, we have zones A, AE, AH, AO. Now we have some older zones such as A1 through A30. Those are slowly being replaced with just a standard AE, but as we still have old maps in play, we still have to keep the verbiage available. We also know about VVE. We also have old flood insurance terms V1 through V30. The V zones are their coastals, and that's where we're going to have a lot more restrictive ordinance requirements to build in. Then we have our moderate flood hazard areas. Zones B are also known as shaded X. That's our, well, actually, let me go back to the special flood hazard. It's also known as our 1% annual event, previously known as the 100-year flood zone. We moved away from calling it the 100-year flood zone because it caused confusion. We would have people call us and say, hey, I flooded 2 years ago. I'm not due again for another flood for 98 years. And that's simply not how it works. So we transitioned to a 1% annual event. And it says in its name, it's a 1% annual event. It can happen any given year. And in some cases, we saw in the Harris County, Houston area, several 1% annual events happening in 1 year. And then we would transition over to the moderate flood zones. Our zones B are shaded X, also known as the 0.2%, also the 500-year flood zone. Once again, we transition away from 500 a year and call it the 0.2. Those are moderate flood hazard areas, and that's where the modeling shows water would go in if we have that type of an event. Then we have our minimal flood hazard areas, our zone C and X unshaded. That's where we're talking about areas of minimal flooding. It's like I said, there will be no maps where you find no flood risk at all. And unfortunately, a lot of our damage to structures are found in X zones. There could be several reasons for this. One of them is because the unprecedented amount of rainfalls. Other reasons could be that special flood hazard areas have such high regulations that a lot of houses are being elevated on fill to meet the criteria to meet BFE or higher, and forcing the water outside of other areas. All kinds of variables that could dictate why they're flooding in X zones. And we have our undetermined flood hazard area, zone Ds. Now, I know these are normally associated with large areas where you're simply not worth the cost to map. But we know there's some flood risks, so it's undetermined flood zones. Now in these areas, mandatory purchase won't apply, but the flood premiums in these areas will be higher than if you were in a X zone. Okay, so one of the things about the NFIP, and when we talk about the compliance, in the ordinance the community adopts, it is required that the community issue floodplain development permits. Now this is very important. We have found that communities have a sound permitting system, often have a very sound floodplain management program, and FEMA conducts what we call community assistant visits to ensure it's basically a comprehensive assessment of a community's floodplain management program. It's a way to ensure that the community is doing what they're supposed to be doing at the level which they're supposed to be doing it. This way it provides a higher level of resilience and mitigation to their civilians and their citizens and help them rebuild back after an event, right? So it's in the local ordinance. Now, the local ordinance is really important because FEMA does not have land use authority. We cannot call a community and say, hey, you have to do this. We can remind them of their requirements to enforce the ordinance, but the community themselves have to enforce their local ordinance. They are the ones who have their jurisdictional land use authority. Okay, now as part of the participating in the NFIP insurance program, as outlined in the Federal Code of Regulations, and shows compliance with local, state, and federal laws, and by the permitting system, by catching mistakes before they happen, it can avoid extremely high flood insurance premiums. There's nothing worse than having a community call us and say, hey, we didn't catch this house before it was built and it lands up being 2-3 feet below the BFE. What can we do to help with the insurance premiums? At that point, there's really nothing we can do. Remember, elevation is king when it comes to flood insurance premiums. So by ensuring floodplain development permits and having floodplain administrators get out and inspect the special flood hazard areas to ensure not any unauthorized development is happening, can provide another layer of protection for the community. And it also can help with your citizens when it comes to the resale value of homes. There's some areas in Houston that are in the special flood hazard area, but because of their locations, they are still considered prime real estate. Now, understanding the risk helps you mitigate that risk. So simply being in the special flood hazard area does not mean you can't live there and live there with relatively peace of mind. It just means you have to be prepared for it. And this is where the elevation comes into play. Instead of bringing fill and build on pier, pylons, or post, elevate that structure. Make it to where it'd be easy for you to continue an elevation project later on if map detailed on the ground truth changes. And that's what our maps are. It's important to remember this. If you look at that diagram, you look to the left, you see an example of one of our digital firms, okay? Now, that is the ground truth. It is a snapshot of time. That is the best information we have available when we completed that map. Now, just like with all snapshots, things change. And it's the same with our maps. As soon as development starts, those maps actually start being less accurate. Now, it will take a lot of development to get to the point where new maps are needed, but keep that in mind. Ground truth can change over time. So by setting up your house to where it can be mitigated, continuously mitigated throughout the lifetime of that home, will set you up for resale value on that home. Okay, so let's talk about flood insurance. Flood insurance is a single peril insurance policy. It only covers flood. It's homeowners and renters insurance. Okay. Now this is really important because standard homeowners insurance will not cover the peril of flooding. Now, standard homeowners insurance will cover if a pipe breaks inside your house, but if water comes from outside to in, you're on your own if you do not have a flood insurance policy. And it's really scary because 1 inch of water can cause up to $26,000 of damage in modern construction homes. That is amazing. 1 inch of water can cost that much damage. Well, residential and non-residential policies. Okay, so that's how the NFIP is broken down. Either it's a residential or a non-residential. So residential are going to be your homes. Non-residentials are going to be your commercial buildings, your nonprofits, etc. So residential coverage limits of $250,000 for the structure and $100,000 for content. So you can get up to $300,000 of flood insurance coverage. It's important to remember that the content is separate in a standard flood insurance policy. Now, most people won't think about their content, but if you were to take your house turn it upside down and shake it. Everything that falls out is your content. So imagine having to replace all of your furniture, your TVs, your beds, your dressers, anything else that is not permanently attached to the house. Having to replace that on your own without content insurance, that would just be staggering. Okay, so non-residential, for our commercial buildings, we offer $500,000 statute for the structure and $500,000 content, so a lot more. But what I really would like to stress here is renters can get content-only coverage. This is vital. As the riffle, I deal with a lot of insurance claims. And unfortunately, I do not see a lot of content-only claims coming from renters because, honestly, renters are not aware that they can get this affordable coverage for their homes. And that's, I mean, even though they're renting an apartment, it's still their home. And once again, the content, if they were able to flip their apartments over, all their contents that fall out are not covered by the owners of the apartment complex. All that has to be covered by the renter themselves. A couple of the things that I'd like to put to truth is flood insurance is available in any flood zone. The only requirement is that the community that the structure resides in is a participating member. Now, we still have some in Region 6 communities who are non-participating, but a vast majority of our communities are participating members in the NFIP. So you simply have to contact your local insurance provider and see if your community is participating and get a quote. NFIP is basically an umbrella. We deal with over 60 what we call write your own partners. These are insurance providers who write flood insurance on our behalf. And then basically FEMA is a checkbook at the end if an event happens. Okay. Now, a couple things I would like to encourage is if you are interested in flood insurance, that you call and get several different quotes. Now, you are not price matching because the quotes are based on FEMA criteria and they should be the same. What you're looking for is knowledge and experience from the flood insurance agent who is selling you the product. You need to make sure all the information provided is true and accurate. I've seen, unfortunately, before where homeowners are buying a new home and they're set to close and they've been given a quote of $400 a year for flood insurance. Well, the information used was incorrect, and when it was caught by the underwriters and the correct variables were used, it jumped up to $2,000 a year, which they were not prepared to pay, and they've already closed on the home. So now they don't have any recourse on this. So I encourage you to shop around, like I said, not to price match, but to ensure that the knowledge and experience of the insurance agent is there. We also don't cover wind. Now, this is really important for our areas down there in the coast. As you know, as I mentioned, elevation is king, but there's some places where you can only build so high before you have to start worrying about other perils, such as high wind coming in off the Gulf Coast. So in some places, you may have to have flood insurance, or you may also have to have wind or other type of wind-driven rain coverage. In Louisiana, I think you have to have named storm policy as well. So it's important for you to understand what is required and understand that flood insurance is just one single peril, and there may be others in areas that you reside. So let's talk about the number of policies in Louisiana for the past 10 years. So as of 7/2020, there's 499,946. That sounds like a lot, right? Well, take in consideration there's over 4.6 million people who live in Louisiana. And I've heard several people before. I've been fortunate enough to teach classes in Louisiana, and one of the variables I have seen is that everyone will admit that the entire state of Louisiana is a floodplain. It's expected to flood everywhere in Louisiana at one point or the other. So as you can see from the numbers of flood insurance policies compared to the population, we are woefully underinsured or not insured at all in a lot of places in Louisiana. So let's keep that in mind. Remember, 1 inch of water can cost up to $26,000, and we're going to talk about the benefits of a flood insurance policy compared to a disaster assistance here in the next couple of slides. But let me break this down for you on flood insurance premiums. Okay, we're going to take a look at the diagram. We're going to start out to the left. Now, we do have what's called a preferred risk policy. This is for a house who has no prior flood loss history, and they're outside of the special flood hazard area. They are eligible for what's called a preferred risk rate. Now, that preferred risk rate, PRP, combines both the structure and content into one policy, which is a great product. So this building right here is getting $50,000 for the bill. This home is getting $50,000 of building coverage and $20,000 of content coverage written into one policy. And that policy is $230 a year. Now there are fees and surcharges added on, so it could be closer to $400 or $500 once all the fees and surcharges are added in. But that's that's only one time per year for that amount of coverage. Now, X-Zone standard flood insurance policy, for some reason, this house does not meet the eligibility for a PRP. So we jump up to $440 per year. Once again, fees and surcharges apply. And that once you transition away from a PRP, as you'll notice, that is only $40,000 for building. Now, the next two examples will also only be $40,000 for building because content has to be bought separately. So we transition to the special flood hazard area, and for the diagram we have an AE pre-firm. So this is built before the first firm. We're talking about $472 a year plus fees and surcharges. Okay. Now, if you'll notice, it's right at the BFE, so it's compliant by by ordinance requirements. Right. All new development and construction has to be built to or higher than the base flood elevation. Okay. But look what happens when you go above the base flood elevation for the lowest floor. Okay. This one's about 2 feet above the BFE. Look at that premium. It drops to $200 a year plus fees and surcharges. Right? That is huge. Remember, flood insurance goes off of several variables, but the main variables that will drive the overall premium is the relationship between the lowest floor elevation, if it's an A zone, or the lowest horizontal member, if it's a V zone, compared to the base flood elevation. Waiting periods are important. Okay, we learned, unfortunately, from Midwest flooding back in the 80s that we did not have a waiting period, and it actually cost us quite a bit. There was flooding in Mississippi, and it was heading down south, and people down south realized what was coming, so they called, and they bought a flood insurance policy that day, and they were flooded within that week, and they received full premium payout. So we transitioned to a typical 30-day waiting period. This is to help ensure people understand that they cannot wait to a last minute before they buy flood insurance. Now, there are some exceptions. If you are closing on a new home, policy will go into effect that day. If there's a wildfire, there's a waiver that can be applied and giving you an exemption. And if there's initial purchase of flood insurance as a result of a map revision, so if your maps change, you have a 1-day waiting period. But by far and large, there will be a 30-day waiting period for all new flood insurance policies. Okay, so this is what I really wanted to talk to you guys about. There is a big difference between what is called FEMA disaster assistance and a flood insurance policy. If you'll notice here, Hurricane Laura, it was a large event, but we did not have that many flood insurance claims compared to Katrina or Harvey type events. But you'll notice the average flood insurance payout was $27,000, okay? Now we'll take a look at Louisiana's severe storms and flooding throughout 2016. The average flood insurance payout was $91,500, right? So the more severe the event, the higher the payout is going to be. But take a look at the disaster assistance. I want you to notice that it's a significantly lower number. Okay, for Hurricane Laura, it's $2,400, and for the severe flooding in 2016, it's $9,350. That $9,350 is one of the largest numbers I've seen for disaster assistance. But here's the important thing, okay? They have to be declared as a presidentially declared disaster in order to apply for disaster assistance. These two events happen to meet that criteria, but there are a number of events that were not declared. Okay, so we still had a lot of houses flooding, but they did not meet the criteria to be declared as a presidentially declared disaster, and that did not open the federal mechanism for relief. So, but on the other end, those people were able to call, if they had flood insurance, call and initiate a claim with their insurance providers. They do not have to have a presidentially declared disaster in order to initiate a claim, and that is so important. It is so important. Not only are the numbers really low for disaster assistance, you're not going to be able to rebuild your home, not even come close to this. You may be able to make one room habitable while you're trying to renovate the rest of the house, but it's not going to come close to making that house as close as you can to pre-event conditions. But flood insurance can. It may not be able to make you whole, but it's going to give you a lot better of a start. Okay, so once again here, So this is from 2015-2020, Region 6. Flood insurance average payouts were $90,000 with disaster assistance 0 with no federal declarations. We also don't do second homes and businesses on this as well. So let's talk about disaster assistance and flood insurance requirements. This is important for you to understand. Now, FEMA has kind of a requirement when you accept disaster assistance. And that disaster assistance is required for you to be protected in the case of another event. And normally that is a requirement to obtain and maintain flood insurance. Now, the thing about FEMA, we go off of the structure itself. Now, the owners are important, but we keep track of the house, the structure. So even though the owners may change hands, the requirements to obtain and maintain flood insurance does not go away if the house is sold to a new owner. In fact, part of the agreement of accepting disaster assistance is that the current homeowner will notify any potential buyers of the obligation to obtain and maintain flood insurance before a sale takes place. Now, if they do not obtain and maintain flood insurance, they would be ineligible for any type of disaster assistance moving forward. Now, this is important for several reasons because these like I mentioned, these stick to the structure. And many times we get calls from people saying, I don't understand why I'm denied for disaster assistance. I just moved into this home. Unfortunately, we have to tell them that this house received disaster assistance in the event of 2016, long before they bought it. But once again, our criteria goes off the structure, not the individual homeowners. Okay, so let's talk about clearly communicating a risk. It is really important to understand where it rains, it can flood. And I hope people truly understand that. We're coming into a time period where we're having unprecedented amounts of rainfalls. My very first disaster was Oklahoma 4222. And we had a lot of rain in areas where they're not used to that amount of rain, and it flooded a lot of egg zones. Harvey is another example, 52 inches of rain in a really small area. So where it rains, it can floods. If you live in an area of high risk, moderate to low risk, or undetermined risk, but there is no such thing as a no flood risk. Remember that. Remember I had you raise your hand if you lived in the floodplain. It's important. If you just remember the entire country is a floodplain, it's just a question of your risk. Okay. Now, flood insurance is essential in high-risk areas. I don't know about you, but I cannot afford to repair $100,000 in damage on my own. If my house were to flood, I have a 2-story house, so chances are my house would not be declared substantially damaged. But in my savings, I have enough to cover us for a while, but not enough to rebuild my lowest floor. I'll tell you now, I'll be totally relying on flood insurance. Now, flood insurance is affordable and still needed in moderate to low risk areas. Those are the ones who have the lowest risk according to our mapping. Now, I'm not saying that they have no risk at all, but it's the lowest risk. So they also have the higher reward when it comes to the policies available. If you're in the area of minimal flooding, also known as egg zones, you are eligible for a preferred risk rate, the lowest of the low. And there's some resources here. We're going to talk about resources towards the end of the presentation, but floodsmart.gov is a really good one, and we'll go into more depth on this one. But take a look at this graph to the right, the red building, high flood risk, right? You have 3 to 4. I'm sorry, that screen is really small compared to what I was looking at. Okay, so we have an estimated 2% flood depth at the 5.2 feet. And then we have estimated 1% flood depth of 3.4 feet, okay? Those are your high flood risks. This is where water can go. I just simply don't know someone who can recoup those losses without having some type of insurance coverage. Okay, let's talk about increased cost of compliance. ICC, increased cost of compliance is also known as ICC. Now, this is part of a standard flood insurance policy. People are paying into this with their regular flood insurance premiums. So what this is saying is an additional amount up to $30,000 can be available to bring houses into compliance if they experience damage by flooding and are considered substantially damaged by the community. Now, I say by the community because only the community can state that a structure is substantially damaged based off the fair market price of the time of the event. So if that does happen, they can apply for an additional claim on their flood insurance policy for the ICC. Now, the thing is, you cannot go over the statutory amount of $250,000, okay? So what that says is if you have a flood insurance policy and you have $220,000 of damage, you can still apply for and receive up to the additional $30,000 for ICC, as long as you do not go over $250,000. Okay. Now the ICC claim has to be filed separately from the normal flood insurance claim, and it's going to have the requirement that you have a letter from the community stating that you have been deemed substantially damaged. Now, one of the good things about ICC is that up to $30,000 can be used in concert with mitigation grants to help cover the cost match for the homeowners. That's really good. Now, we know grants are competitive and sometimes they can take a while, but being able to use ICC to pay for the 25%, which is normally part of the cost match, is really helpful. Okay, requesting flood loss history. This is important for homeowners and those who are potentially looking to buy a home that may be in or around special flood hazard areas. A flood loss history report is only provided to the current homeowner. Okay, homeowners can request a copy of their flood loss history report by calling the number on the screen. If you have an active flood insurance policy, you should receive a flood loss history report when you receive your renewal notice. If for some reason you do not, you can also call this number. Now, this number is a way to initiate the process. Okay, like I mentioned, only homeowners can call. So, what you're doing is basically calling and having an affidavit sent to you, so you can verify you're the owner. And send that back in by snail mail. Then a few weeks later, you will receive the report. Now, once again, the report will go off the lifetime of the house as long as they've had flood insurance. It won't dictate who owned the house during that time. It will only tell you how many claims have happened since that house has had a flood insurance policy. Now, this is really important because you could have flood loss history that would make some houses ineligible for certain criteria. So by requesting that flood loss history, if you're a prospective buyer, is a great way to be informed in the potential risk of where you're buying. And also homeowners, it can also help you apply for grants. If you have multiple losses, you could be considered repetitive loss or severe repetitive loss, which could move you up on the chain when it comes to being eligible for certain types of grants to help mitigate the house. You could either be considered for elevation projects or to be bought out. Recovering from a flood it's very emotional. It is time consuming. It's just scary. It takes a lot out of people. Now imagine having to repeat that 4, 5, 6 times. Some people just want to be bought out and move away and find some place where they won't be as high of a flood risk. So that's a possibility as well when you use ICC in concert with grant funding. Okay, a couple things I want to leave with. We're getting close to the end of the presentation. Disaster assistance is not the same as flood insurance. Remember that, okay? For disaster assistance, the event has to be declared. A presidential declaration has to be issued. And then it still take a few weeks for the federal mechanism to become available for disaster assistance to be applied for. When you talk about flood insurance, you can even call and put in a flood insurance claim when the event is still ongoing. And that way the adjusters are ready to go as soon as it's safe to reach those areas. You don't have to wait for a president to declare disaster, which is so important. I'd like to leave you with get the amount of flood coverage you can afford. There's some people out there who have a $150,000 house and they have $250,000 in coverage. You are not going to get $250,000 of a payout if your house is damaged to the extent of $150,000. Purchase the correct level of coverage for your home. And now, if you cannot afford the correct level of coverage for your home, buy what you can. Even $50,000 of flood insurance coverage is still better than having to wait for only $9,000 was the maximum amount we saw for disaster assistance. So buy what you can afford. And don't forget, there's that 30-day waiting period. I want to leave you with renters can get flood insurance. can get content-only flood insurance for a few $100s a year. That is so important for me as the riffle. I want our renters to understand that they can be protected from the peril of flooding just like homeowners can as well. And last but definitely not least is every flood zone has a flood risk. Remember, not on any FEMA maps will you find anywhere will it say this area will not flood. That's just simply not able to predict that type of risk. So with that being said, let me turn this back over to Cindy.
All right.
If you have any questions, please, I'm going to be available for a while.
All right. Thank you, Gil. We actually do have a couple of questions. One is, if your community is non-participating in the National Flood Insurance Program, what can an individual do to get flood insurance?
You can look on the private market. There are some private insurance providers who are writing flood insurance policies. The question is, are they writing policies in your areas? If your community is non-participating, more than likely they probably will write in your areas. Where we see that they're selective is areas where they have a lot of flooding, and where we have a lot of flooding, normally we have really good maps. So you can look in the private sector to see who sells private flood insurance in your areas.
So they could just do a search for, like a Google search for private flood insurance policies. Would that work, you think?
That is correct. In fact, a lot of private insurance providers have internet engines where they give you pretty accurate quotes as well.
Great, thanks. Okay. One other question is, how do you get the flood loss history on a property if you're a potential buyer versus being an owner?
I have a requirement from your real estate agent for the current owner to provide that document.
So part of the okay, so it'd be part of the sale then. If you were looking to buy, you'd have to be part of the package.
No, I would require that before we went to closing. I would find it really suspicious if a homeowner is not willing to provide that document. I would probably look at a different home. But only the homeowner can order that report. So it does leave those who are considering buying and kind of a area I wouldn't want to be in. So I would require that document before closing, or I would look for a different house.
Okay. All right. One other question is, when you file a claim with your National Flood Insurance or for flood insurance coverage, and there is a deductible, correct?
Yes, and the deductible is set by the insured. So it can be as the insurance agents will set the deductible with you, and it will have a bearing on the premium. So the higher the deductible with the maximum amount is $10,000, it can lower the flood insurance burden. The lower the deductible, the premium is going to be a little bit higher. So I really hate to say amount. It can be $1,000, $1,200 up to $10,000 for the deductible.
Okay, very good. And now a personal question, and if you're not willing to answer it, I am. Do you have flood insurance, Gil?
Yes, I do.
And
I have a preferred risk policy, full $250,000, $100,000 content, structure and content.
I like it when you practice what you preach. I'm the same way. So unless there are any other questions, I don't see any in the question and answer pod. We hope we covered everything. If not, you can certainly call us at Community Education Outreach Specialists and talk about ways to reduce your risk. You can call us at 833-FEMA-4US or 833-336-2487. There's our email address there with FEMA-LAMIT@FEMA.DHS.gov. We've added the to file for FEMA assistance. And if you call us and have a flood insurance question, we will refer you to Gil or one of his associates. So in closing, thank you for joining us today. We